There we are.
We're back.
It's actually live. We are back. To everybody that has been, crying themselves to sleep at night and freaking out because Go FUD Yourself was MIA for a little while, we're back. We're doing a little bit of a different structure, but maybe we'll talk about that later on. Today, though, we're talking about ETFs.
We're going to talk about ETFs for so long. Okay, we're going to start with what an ETF is. We're going to keep that pretty brief because if you're logging in here, you probably already know. But also, if you need to share something with your mom, you can send her this episode and she'll know what an ETF is. And then we're going to talk about ETFs by country. So where they actually started, where crypto ETFs began, why it's taken so long for them to get to the States. We're going to talk about the Bitcoin ETFs in the States and how they have gone, the timeline of those, the impact that those had. And all of this is obviously a lead up for ETH ETFs in America. And we're going to talk about all the latest news. We're going to talk about what analysts have to say. We're going to review it and we're going to FUD the FUD out of it.
FUD the FUD.
FUD the FUD.
Well, let's go. Okay, ETFs, what the heck are they? I guess that's where we'll start. So basic background, what is an ETF? A cryptocurrency exchange traded fund is a type of investment that tracks the performance of a cryptocurrency index or a selection of digital assets, and it's traded on traditional stock exchanges, similar to stocks. The financial tool allows investors to gain exposure to cryptocurrencies without the complexities of direct trading or ownership of digital assets. Essentially, it creates a unique blend of trading flexibility, and it also helps, investors diversify their portfolios among assets that they otherwise wouldn't. So
yeah, that's how I understand it. Right?
Why do people use them though?
Yeah, I think it's that accessibility. So like I started, if your mom doesn't really know what an ETF is and she doesn't really know what crypto is, but she knows that she should probably have some Bitcoin, she can go to her financial advisor and be like, help me out here. And they can kind of get that for them. It's not so DeFi. You don't have to have all your wallet, seed phrase, keys, that kind of thing. It's a little bit against that degen ethos, but it does work in terms of making crypto more accessible, which of course, if we want market adoption, is what we need. And then that means that we have more investors. So maybe there's more liquidity and maybe there's less volatility. I'm not gonna write home about that one, but we'll see. Of course, it also leads into personal diversification, right? So investors can actually diversify their portfolios, but you don't have to you don't have to be airdrop farming or have a bunch of token involvement or be active in governance. You can just get a bit of Bitcoin as part of your portfolio. Does that make sense?
Yeah, I mean, diversification is obviously super important. You want to try to find somewhat uncorrelated asset classes so you can actually manage your portfolio and manage your risk and not have any overexposure to any one asset class like we all do in crypto. We're all probably overexposed to crypto, at least I am.
You're a maxi? You're a crypto maxi?
But there's a few other advantages of ETFs. I mean, again, for people that know about this, obviously forgive us for going back to basics, but I think it's pretty important because a lot of people are excited about it, but can't tell you why. Yeah. And so regulatory oversight is another big piece of this. Obviously, there's fairly strict regulatory oversight. It's under the SEC in America and under most federal regulators in most countries. A lot of these frameworks are very difficult for every company to adhere to, but having larger companies issuing these ETFs, there's a significant increase in your regulatory compliance and what the responsibilities of the issuers are and what your rights are as holders. Also, it's pretty cost effective. So some of the challenges for individuals in buying Bitcoin, as an example, if you're going to put $100 a month into Bitcoin as a part of a savings program, I mean, on any given day, it could cost $20 of that 100 just to get the Bitcoin in network fees, depending on where you're getting it, or spreads or different things. Like the fees are pretty extensive. So ETFs obviously get economies of scale. And lastly, risk management, I think, is a big piece. We're not seeing a ton of this right now in these ETF vehicles, but often they can add in leverage and hedging instruments and other things into these ETFs. Right now, the ones that we've seen have been mainly pure, relatively pure. Finally, one other thing that I think is really interesting about these ETFs being approved in Canada, some in Europe, and now, of course, in America, is that they can also now become part of the retirement tax advantaged products. So in the US, 401ks, IRAs, in Canada, RRSPs, TFSAs, et cetera. That's a big deal for a lot of people. There's a lot of tax advantages to some of these structures. So I think all in all, ETFs are relatively straightforward. They make a lot of sense for kind of your average run-of-the-mill person. We're going to talk a lot more about that later. But maybe we should go through a little bit of the background kind of history. How's this?
Yeah. So I learned yesterday that ETFs in general, not crypto ETFs, but ETFs in general, were introduced in the 90s. JD, you're older than dirt, right? Do you remember when they were introduced?
Yeah, I'm pretty old. So when I was in TradFi in the early 2000s and early teens, ETFs were really starting to make waves. And the reason was, prior to ETFs, which are generally programmatically managed if they're a basket, or they're just single assets, or they mirror exactly an index, or whatever the case is, they allow you to remove so much risk for relatively low fees, where otherwise you'd be paying for mutual funds or an active broker or. And this just allows for like fairly cost-effective, getting exposure type of management. It's not super sophisticated financial planning or financial strategies or any of that stuff. But yeah, I think ETFs have kind of been around and have been a thing for a while. It gives investors access to baskets of assets that they most likely otherwise would never have had exposure to, which I think is great, obviously.
Yeah. That's interesting. So I had to dive in. I don't have the cool TradFi background that JD has. I had to dive in about what the heck is an ETF? Why do I care about what an ETF is? How did they start? And then, of course, because I love the crypto arms race, I needed to know who did crypto ETFs first. So no surprise, it was tax havens. Jersey, Liechtenstein, Cayman Islands, and Guernsey. Well, Guernsey was a little bit later, but those were all kind of the primary places that started crypto ETFs, and most of them started with Bitcoin ETFs, and each of them are in the multiple millions. Jersey's is the largest one at about 750 million in total ETFs right now. And so that's kind of no surprise to have something like this start in a tax haven. Makes sense. You already have your crypto there, etc. But I was surprised to find that the next two success stories for crypto ETFs were Germany and Canada. So Germany's came live in June 2020 and is now one of the world's largest, or according to a couple of sources, it is globally the largest Bitcoin ETF, currently at 802 million. And it also kind of led the way for European ETFs, although we haven't seen them necessarily go live in every country. And then Canada got their first crypto ETF in February of 2021 and now has, I believe it's 7 spot Bitcoin ETFs. Why would these be the first countries, JD?
That's a good question.
I feel like you might know.
No, I really don't know. And so, like, I mean, first of all, it took me a second when I first read this that I was thinking Jersey is in New Jersey. I'm like, yeah. That's not a country, morons. Turns out I'm the moron. Thought I'd point that out. But why are these countries first? I mean, we talk a lot about crypto arms race, and obviously countries are vying for, opportunities to show that they're more forward-looking, forward-thinking, come here, invest here, yada, yada. So I think that's part of it. I think another one is really just types of political regimes in different places and different things. I mean, Canada's fairly liberal, generally speaking, as a country, but they also love regulation and government oversight in Canada. And so, I mean, it's not surprising to me that as soon as there was a few issues, some of these countries have had fairly big issues a long time ago. Like there was Quadriga, it was called in Canada. That was kind of a big deal. Germany's had a ton of exploits and different issues with their exchanges over the years. I think maybe it's just a function of adoption plus political environment plus, some experiential stuff. I mean, in the US, obviously, we're very late to the party, unfortunately. But I mean, I don't think it had anything to do really with what the regulators originally were saying, but rather now is just political. It's being approved because of politics. That's it.
That makes sense. And if you look at the timing, so the next two after Canada were Australia and Brazil, both in 2022. And if I recall correctly, Brazil's was timed politically as well. So yeah. Not surprising to see that. Not surprising that crypto ETFs started in tax haven countries. Not surprising they started on Channel Islands. A little bit surprising that Germany and Canada were the first movers here, but they also didn't really expand very much. A lot of it has really stuck to that Bitcoin ETF, which, let's talk about that. So Bitcoin ETFs in the States. Do you remember being really excited about this last year?
You know what? We just needed a catalyst. We needed something to get the market excited again, and that was it. So, but yeah, I remember being excited about it.
Well, the US did have the opportunity to be first movers here even before all of our wonderful tax havens, because the Winklevoss twins submitted the initial, is it a lie?
No, Winklevi. I'm kidding.
Oh,
That's Winklevoss plural.
You said it's a lie. I was like, you could have fact checked me before the episode.
No.
Just setting me up for failure. So in 2017, the Winklevi twins actually submitted in 2013, submitted the initial proposal for a Bitcoin ETF in the States. Their application and all proposals were rejected by the SEC. We aren't surprised about this. There were some accusations that they might be trying to get into market manipulation. Realistically, they're probably just trying to be the first movers. But this idea was already out there. It's not like this is super new to the States or something like that. It just happened to take about 10 years for it to actually be approved. And then in 2018 to 2020, there were additional proposals from other people in terms of spot and futures-based Bitcoin ETFs. Again, everybody said, oh, there could be potential market manipulation. We don't really know how custody works. We haven't really regulated crypto, so we can't do this. In 2021, Gary Gensler came on as SEC chair. Obviously, everybody was super excited about that, thinking he was going to be open to considering Bitcoin ETFs, especially those based on Bitcoin futures. Didn't happen still for a number of years, but they did approve the U.S. Futures Bitcoin ProShares Bitcoin strategy, which launched in 2021, but didn't get approved in 2021. And then in 2023, last year, we finally saw, in 2024, but the conversation had started late last year. So early this year, we then saw the SEC approve multiple spot Bitcoin ETF applications. That's a lot of time to get a Bitcoin ETF through. Why did it take so freaking long?
I mean, the U.S. is generally known for being a little slow on this stuff because it's so bureaucratic and it's so political. Like, until I lived here, you can't really understand how politicized everything is until you're here. It is insane. Everything comes down, in the end, it seems like, to some version of politics, which is kind of crazy. But I mean, there's been a lot of excitement since the initial launch. Obviously, we saw pretty insane inflows, with the initial introduction of these ETFs. And again, it's giving people that probably otherwise wouldn't have found a way or tried to find a way access and exposure to these assets. And for a lot of reasons, I mean, they've been in public consciousness, especially for the last 4 or 5 years, for sure, when meaningful people and pundits and news outlets and trading strategies involve Bitcoin. And so, I mean, it kind of makes sense. I think, obviously, not having to manage private keys and custody and all this other crap is pretty appealing for people. But I mean, in pre-market alone, before they launched, there was 2 billion in orders. So, I mean, obviously, people are pretty excited. I mean, the inflows have slowed now, obviously. I think there's a heck of a lot of room for these ETFs to continue to expand, but we're in the multiple tens of billions in ETF market caps in America, which is like not a small feat for 4 months, in my opinion.
There are now 11 Bitcoin ETFs live in the States. That's the total count. 11 that you could get your mom or your dog to invest in. Yeah,
there's some other reasons that this is kind of seen as such a big thing, obviously. It's somewhat of a coming to age, party for the asset. It signals to the market that, regulators are now taking this seriously. I think, not that they weren't before, but
They totally were.
at least now they're acknowledging that it's an asset class that's likely here to stay. And now let's figure out how to deal with it, which is promising, I think, long term.
Right.
Does it do a lot for us short term? The Bitcoin ones, maybe not so much. There's some really, well, not so much, but obviously it's great in a lot of ways. But the ETF one, I think, also helps formulate an argument that maybe not everything is a security, because they have essentially blatantly suggested that it's not a security. ETH is not.
Well, let's talk about exactly that. So we have Bitcoin ETFs, and then May 23rd, we also have ETH ETFs. Yeah, I feel like we should have like a celebratory, like a firework or something.
Yeah, like maybe like a big confetti or something. Hey, producers, we gotta get my Stream Deck.
Yeah, absolutely.
Loaded up with effects. I don't know how to use it, so someone has to tell me how to program the buttons, and then I'll just press it.
Okay, let's jump into this actual news. So the SEC has approved the first Ethereum ETF, signaling a major milestone in crypto adoption. This approval is widely regarded as an implicit confirmation that Ethereum is not classified as a security, both boosting its legitimacy and potential for broader financial adoption. This move could expedite further ETF approvals for other tokens and encourage substantial institutional investment. As we talked about, the risk management is a bit easier. With the crypto community and markets reacting positively, ETH's price has seen a noticeable increase over the weekend, as did, most of our bets. This decision could pave the way for more crypto-based financial products and influence global regulatory approaches to cryptocurrency. JD, what do you think? Is this the gateway drug, ETH ETFs?
I mean, I think it's the logical next step. Second largest asset by market cap, obviously has been around for quite a while and is fairly well established, again, in the common consciousness. I think it makes sense. I'm a little less optimistic when it comes to who's next, Solana versus Ripple or whatever. I'm not sure those assets are in the same category as ETH BTC in terms of being fairly well established and having some deep roots, I think, in the space. So many things are being built on top of both that it's inevitable. Anyways, is this a watershed moment? I think it's important. I think it's very important to start leading the way for many of these kind of Western-esque jurisdictions that have been just waiting around for someone to take a stand. The US has somewhat taken a stand, and again, suggesting in this that ETH is not a security, really, I think, could inform what the future of regulation looks like. And so for me, I think it's definitely a step in the right direction. I think it's a bit of a kind of the walls of the dam had to be opened at some point, and here we are. Now let's see if we can contain the water in anything meaningful.
I want to talk a little bit about the specifics of what people are saying. These people are more of an expert than I am, so it's probably important to note. So Eric Balkunas, a Bloomberg ETF analyst, believes that the typical S1 filing approvals, which are usually 5 months, will likely be shortened because we're seeing this particular ETH ETF be approved in May, and it's supposed to go live in June. So they think that this could set precedent not only for other token ETFs, but just for ETFs in general being launched. So that's kind of interesting. I
think that's a really important point. I don't want to derail you before you go through the rest, but one of our biggest criticisms has been, okay, so we're going to get some regulation. We all know that. But when we get it, are they going to make it a fair playing ground? And arguments could be made that up until now, it's not really been a very fair playing ground. The only time that these things get approved is when the big incumbents come in with significant lobby and significant influence over the government, BlackRock, et cetera, JP, all of these larger entities coming in. And is it making it where it's the incumbents have a significant advantage? And I think hopefully we'll find more of this, where maybe the initial ones, they need someone with enough credibility, possibly, or brand recognition, maybe, to champion the first ones. But then they have to make it a heck of a lot easier for subsequent competitors to come into the space. Because if you give someone a 6-month head start, I mean, it's going to be very difficult to come back from that, obviously.
Absolutely.
And so I hope we see more of this. But like, this is what we've kind of been talking about, that there's all these countries, even MICA. I mean, the amount of applications relative to the amount of approvals is alarming, because if any of this stuff comes into effect soon, which it will, how the hell are we going to all come into compliance? We're not. So then what? Yeah. Then is it just a big litigation frenzy? I hope not. Anyways, I'm derailing the convo. Go ahead.
About coming into compliance, because the other thing that's a big deal here is, again, a Bloomberg analyst, but you're probably seeing this all over the internet, is that the SEC's approval of commodity-based trust shares for ETH signify that it is not a security, but a commodity. A commodity, not a security. I'm not sure what that's going to do with all of the lawsuits that are going on with the SEC right now, but
yeah, again, it's not direct enough, I think, that it sets precedent, but it sure leaves a fairly large crack in the door for challenges later on. So we'll have to see how that goes. I think another thing that analysts have been talking about really is, because the Bitcoin ETF had so much excitement, and there was so much fanfare and everybody was all excited, and we had nothing else to talk about in the space. And there was just a ton of built up interest from institutions and retail traders and so on, because Bitcoin people have been publicly aware of it for a long time. What's happening now is the SEC, after greenlighting the Ethereum ETF, analysts offer a cautious outlook on the potential market impact compared to the Bitcoin ETFs. So while Ethereum saw a price surge in anticipation of approval, which was strange, all of a sudden we had analysts going from 25% probability to 75%, and then the next day it's approved. A little strange for me. But anyways, price surge in anticipation of approval. Analysts like Noel Atchison from Genesis Global Trading predict significantly lower institutional demand for Ethereum, estimating that Ethereum ETFs will capture only 10 to 15% of the trading volume seen by Bitcoin ETFs. Despite these tempered expectations, there are contrasting views, with some predicting substantial inflows and a bullish future for Ethereum prices. I mean, yes, I tend to agree. It's 1/3 or less of its market cap. So obviously there's probably going to be less demand. It's a different asset with completely different risk components and completely different price volatility and completely different use cases and value accrual mechanisms. So they're not the same, obviously. So they should be assessed differently. I think it kind of goes without saying. I mean, your mom, aunt, and grandma are probably starting to become slightly aware / comfortable with Bitcoin. I mean, getting them to a point of understanding that Ethereum powers smart contract platforms and is the backbone for all the L2s and all this other stuff. People, it's a bit more of a gap to cover, I think, before you're willing to get into ETF on ETH. Now, that being said, I think there is and has been a desire to have access to some more of these kind of risk assets. And I think most people's portfolios have kind of been stagnating a little bit. I mean, the markets have gone bananas, but they can only go so far, and they're way overbought in trad markets, stock markets. So, I mean, trying to find ways to diversify, trying to find other, areas of potential value capture, I think ETH just makes sense. A lot of this depends.
An element here, I have to interrupt. There's an element here in terms of that diversification, in terms of exactly what you're saying, is that we are looking at CBDCs that are on-chain. And as people get onboarded to on-chain CBDCs, they will be less fearful, likely, of crypto, and they will want to diversify from their own fiat CBDC. And now they have an easy way to do so. So as much as we can say, oh, the market's not really ripe for this, it's probably going to be 15% less than the Bitcoin ETFs. Like, ETH is a different ballpark. This isn't accounting for all the L2s, all the tokens, or all of the CBDCs and stablecoins being built on ETH.
Yeah. I mean, one of the guys from Standard Charter, Jeffrey Kendrick, said that they expect Ethereum ETFs to get somewhere between 15 and 45 billion of inflows. Pretty wide range. Nostradamus. But within the first year, they predict the Ethereum price could hit $8,000. Is that possible? Sure, obviously. Is it likely by the end of this year? It's only a 2x from where it is right now. So I actually don't think it's insanely unlikely. I think it's definitely possible by the end of the year. 15 to 45 billion also kind of makes sense. We're in the 40 billion-ish range, I think, of Bitcoin ETFs volume at the moment, or market cap. So 15 to 45, that kind of makes sense. Roughly a third after starting the year, a third of the way late. Makes sense to me. I just think that that's still pretty attractive. I mean, if you get 15 to 45 billion out of a $250 billion market, you're talking 15 to 20% market share.
Absolutely.
Like, which if we could get 50, well, actually that's my math is very wrong. Right now it'd be roughly 10%.
Okay.
But nonetheless, 10% market share in year one. Like what?
Yeah, don't be mad.
How would that not be exciting? Go ahead.
Don't be mad about that. The other thing that is interesting here is, fine, we're talking about ETH price action. We're talking about who's going to hold. We're talking about how big that market could be, how deep the liquidity can go. But there's also a lot of analysts talking about how ETH ETF approval will strengthen Bitcoin's position, especially with Bitcoin already having an ETF.
Got to take this article.
Michael Saylor, who's the founder of MicroStrategy. What do you want?
You got to take this article with a grain of salt.
Oh, of course. But it's an interesting concept. So Michael Saylor, who's the founder of MicroStrategy, look them up if you haven't already. They do all kinds of research papers and that kind of thing that are not only about crypto, but quite a few about Bitcoin specifically. He has expressed a positive outlook on the recent SEC's approval of the spot ETH ETF, suggesting it benefits Bitcoin even more. Speaking on our friends and podcast, What Bitcoin Did, Saylor articulated that the approval not only legitimizes the crypto asset class, but also bolsters Bitcoin's status as the leader in the sector. He highlighted that institutional adoption is likely to increase, with Bitcoin expected to capture the majority of any capital allocated to cryptocurrencies, reinforcing Bitcoin dominance despite the growing market for other crypto assets. He says, I think it's good for Bitcoin. In fact, I think it may be better for Bitcoin because I think that we are politically much more powerfully supported by the entire crypto industry. What do you think about this?
I do actually really agree with this. Saylor is...
So much for yourself.
I don't often agree with Saylor, mainly because he is unapologetically a Bitcoin maxi, which is fine. I mean, he's built his entire business. He's transformed his business, MicroStrategy, to be focused almost entirely on Bitcoin. Okay, last time I checked, I think they had 200,000, 240,000 Bitcoin or something like that.
Yeah, something insane.
They own a lot of Bitcoin. So that being said, I think he's, like I said, you got to take it a bit with a grain of salt. I do agree, though. I think, the Bitcoin kind of demo, the people that are like super convicted about Bitcoin being, the one asset that matters, aren't always the same group that also see all the value in the other kind of ancillary crypto innovations that we've seen with Ethereum and smart contracts and DeFi and GameFi and all of these on-chain compute and all of this other very interesting things that are happening, decentralized storage. Anyways, when we get all of those political intentions aligned, which I think we have right now, we're seeing engagement not just from Bitcoin, but also from ETH and other kind of waterfalled assets down the list of top currencies. I think it's great. We're getting more and more supporters of a common cause, and that is the asset class is here. Bitcoin's not going anywhere, obviously, and neither is Ethereum, obviously. And so, yeah, I think it does a lot of good, in my opinion, for the space as a whole, by having more ETFs approved.
Okay, JD, since you are fuddy on Michael Saylor of MicroStrategy, tell us what BlackRock says.
Well, I'm not fuddy on MicroStrategy. I just think he's just unapologetically a maxi. You just got to take it with a grain of salt. That's all. Anyways, following a significant surge in Bitcoin and Ethereum prices driven by recent ETF approvals, BlackRock's head of crypto, Robert Mitchnick, discussed the landscape post-approval. He highlighted Bitcoin's dominant interest among clients, with Ethereum also attracting attention, but to a lesser extent. The unexpected approval of Ethereum ETFs by the U.S. Securities and Exchange Commission, speculated to be influenced by political pressures, has stirred the market, pointing to a possible expansion of crypto ETF offerings. Mitchnick noted that while many projects in the crypto space show promise, the journey to establish substantial market presence is still in its early stages. Absolutely. I also agree with this. One thing that we haven't really talked about is if you only have a single ETF, it's really hard to diversify within that asset class in any way, shape, or form. And so now, if crypto is becoming a meaningful proportion of people's investment portfolios, they're going to want some selection of available assets and management structures and so on and so forth. And so I also agree that I think, getting the first couple of large ETFs out of the way, making sure that participants in the space and in TradFi understand the application process and the compliance process, I think we'll probably see a quicker follow of more being approved. I'm hopeful for that, for obvious reasons. That being said, I mean, just because you give a Solana ETF does not mean, every time that we issue an ETF, it does not mean that the public, your retail users are going to go bananas buying it. Now, Solana is maybe an exception because people buy Solana for no understandable reason, in my opinion. For anybody watching live, I often shit on Solana. I'm
not going to make any friends here, but
no, probably not. I shit on Solana mainly because of my own bias, to be honest. It's not very objective. But anyways, who knows? I mean, who knows where the demand will come from? Obviously, we saw things with like GME and the GameStop thing and all that stuff that who considered buying GameStop until all of a sudden everybody was, somehow it got through Reddit and got everywhere. I think we'll see something somewhat similar here.
Okay. That is your half-hour look at ETFs. That's it. That's what a crypto ETF is. If you have friends asking you if they should diversify that way, you could send them this and they would at least know what they were talking about a little bit better.
Yeah, send them the video, like, share, subscribe. We're going to do more of this. So I mentioned at the beginning of the video, we're kind of switching up our structure a little bit. So we're doing a little bit more topic focused discussions on Mondays. And then currently every second Friday, we're having FUD with friends. So the cadence is no longer going to be daily. It's going to be Mondays at every second Friday for now. We're going to slowly probably add more stuff over time. But we want to make sure that we're delivering content that matters, that people care about. And
something useful for one.
Yeah. And so just getting up here and talking, although it strokes my ego nicely, doesn't really do anybody any good. So we're trying to make it a little bit more researched, a little bit more focused on topics. So hopefully you'll stick around and keep watching the show. Thanks, everybody, for your time. And with that, Ceara, have a great week. Go FUD yourself.
Go FUD yourself.
Later.